There we go. So if you're just tuning in, guys, if you're late to the show or you're watching the replay, we've spoken about quite a lot in the last 39 minutes. So we've spoken about how to best get entry and market timing for your trades. We've spoken about how many trades you need to take a month or a week to hit your 10% target if you're going for a funded account. They're just the two main topics. And obviously there's so much more that we've unpacked in there. So if you are just tuning in, make sure you catch the repeat or the replay of this, because there'll be a lot of knowledge bombs for you. But we're going to jump in just because of time. We're going to jump into the trade setup of the week with Mr. Andy Demi. So I believe we're going to go into the gold market and then use that as a kind of indicator of dollar strength before we do the FX news and a pro trade setup of the week. Is that right?
Yeah, I mean, we'll have a look. I just want, the other thing I want to mention here on the news is obviously we spoke last week about it being non-farm payrolls and the potential impact that it could have on the dollar, and the risk of trading on that is if it goes against you, then the likelihood is that it's going to stop you out. And if you have a look here, we were planning for the dollar to pull back, but then we got these really strong numbers. Now, what often happens is these numbers often are mixed. And so you get a little bit of a spike and then the market ends up being where it ended up. But in this situation here, what we got was really, really bullish numbers coming out from the US. So just to explain this could have an impact going forward on what we see. So the payroll numbers were predicted to come in at 870,000, but actually there was 943,000 new jobs created, which is a stronger number than the previous month and a lot more than predicted. The biggest kicker, though, what's made this number really impressive is not that. It's the fact that the average hourly earnings didn't drop. We were predicting a 0.3% hourly earnings, but actually it was 0.4. So this is very, very bullish for the US. And that could create a market which, there might be some continued dollar strength coming into the market. Just a quick, before I look at gold, actually, let me just have a look and see what else. Before I look at gold, I just want to see, just bring in euro dollar for a sec. In fact, let me do something different. Let me just bring in the just want to have a quick little look at, oops. I've just I haven't synced it. That's fine. So this is the US dollar index on the daily chart. So we were speaking about potential dollar pulling back. I don't have the exact chart here, and it has been pulling back. And you can see there that we hit that top end of this target channel here. But this is obviously, this was off the back of Friday, where the dollar has increased in value right now. So it's at an interesting point right now, the dollar. And obviously that's going to have an impact on what the other markets are going to do, including gold, which is affected by the US dollar. So at this stage, you can still say that, this is just a pullback and potentially the market could go down. But we're going to have to wait and see how that plans out. There's a little bit of support coming in. So I think the natural thing is to go at least test this line, and then we'll see where we go from there. Now, let me just go back now to gold. I know that people have been requesting this, so that's why I am covering this today. It's just in kind of just to be transparent, like this is not really a market that I trade very often. I do trade it, but very, very rarely. So what I did, instead of having all indicators on here, is I've just kind of actually gone back and set up a new layout here, and I've added the monthly, and I've added the weekly, and I've added the daily. So I want to show you something. So I literally had a quick little look before I got on of what's going on here, and I want to show you a couple of things from what I can see here. So the first thing that I can see is that obviously this market has had a nice move up, and it's creating this kind of flag right now, right? But the interesting thing is that it did something similar over here. So it did something very, very similar over here, and it looked like a flag for a little while, and then eventually the market pulled back. And if we kind of add in the MACD here, at this stage right now, there's a couple of things that have happened. One is we've got this, we've got a little bit of divergence on these highs. That's the first thing. The second thing is that we've had a MACD cross, which is a bearish signal. Now, right now, this market is still flagging, and I just want to show you something here. If you take a look over here, before this market broke down, it kind of went up like this, right? And I'm just going to take two lines here. So this one was the actual line that got broken before the big pullback. And we could actually take this and see if it kind of fits here as well. So we're below this right now. And if I just take this line to see how, whoops, one sec. Check this one. And we'll clone it and have a little look over here. We are essentially right now, we are just holding where this is the current month. I would be very, very interested to see where this month is going to close up. If we close, in my opinion, if we close below here, then based on history, we should be looking for this market to potentially pull back. Now, one thing we can also do is, I'm going to go into the lower time frames, because you'll see that what this is actually doing right now. Because right now, there's some bullish price action coming in because it's hit the bottom of the channel. But a couple of things that we can do in case we are going to break down is just kind of prepare. And I like to see, on the last time it pulled back, where it went down to this orange line over here. So if I just take this high to this low here, I would definitely keep an eye on this orange line right there, as well as obviously the 618, okay, which is right there. And so if we do close below here, guys, I would actually expect that this market potentially is going to start to go back and test this old resistance here. If we hold, then we might be looking for this market to potentially start to break the highs. Now, if I just zoom out for a sec, I'm going to do one more thing here. Let me just see if I can plot. This is a monthly chart, don't forget, guys. So I'm just taking an overview of what's going on in this market, and then we'll go and see if there's anything else to kind of look at here. So these are the major trend lines that we've got right now. And I would also just have a look at the down move here to see what kind of speed this was coming down. So that looks quite nice, right? So we had resistance, resistance, resistance. It broke it, became support. The market rallied. So we could take this line here, project this up, and again, you can kind of use this even as a double line. Right now, for me to be bullish long term on gold, where I would say, right, you need to be buying this, I think we need to be sitting here in the next couple of months. And then you can confidently start to buy this higher. And you can start to look for these higher points up here. Right now, we are in decision mode. Now, it doesn't mean you can't make money in decision mode. You can. So I'm just going to go straight to the daily chart because I want to make sure that I'm not spending too long. If you look at it from a daily point of view, you can see that this market is basically ranging, right? So it's channeling, and we are trying to identify basically what's going to happen next. So let me have a look and see if there's any kind of nice clues here that we can use. So if we just take a couple of points, let's see. Nope, don't like that. Let's have a little look at this little point here. Market is acting as support, support, support. That's quite close. Let's see if this had any kind of reaction here. So it did act as resistance here for a little while, and not so much here, I don't think. Yeah, it's not too bad. There's some, yeah, there's a touch possibly there as well. Not quite. So there's a resistance point there. Broke it, acted as support, support, support. So it's just holding right here on this line. So I'm going to use this line because it looks okay. Let me see what else we've got. Even there, it's quite nice, right? So look, support, 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 became resistance, became support. So we could say that this is quite a nice line. And I'm going to use it. I'm going to say, right, let's stick this up here. And you could even possibly have something here. Yeah, it looks like a fake. So you had look, support, broke it, acted as resistance, and then kind of like a fake out. So I think right now, this is a daily chart, right? So it's difficult to kind of look beyond just trading in these little mini channels. Like I wouldn't be overly bullish and buying this. I mean, for me, as I said, guys, like if you want my confident opinion on where gold is going, I need to see this really break above here. Otherwise, we're trading ranges. If we close below here, then I'm going to expect this market to start to pull back. So it's quite a significant month right now. The other clues that you can look for is volume. Like you can see, for example, here, that was good. So this little scenario here is market pushes down, the volume increases. Market pushes up, the volume doesn't increase. So that's bearish. And you can see here that the peaks at the moment, yeah, the peaks are on the downside rather than on the upside. So the clue will be, one of the clues you can look for is where you can start to get really bullish on this is if we start to break above this line and you start to see some green volume here, that's going to be a clue that actually the buyers are stepping in right now and there's some interest coming in, which obviously we'll see if that happens or not. Where did this market pull back to? Did it get to? It's 1618. Yeah, look at that, guys. I mean, that's just, this is, so if you've done your, if you had done your A, B, C, D, the way we teach you, the market went from an A to a B, it went into the red zone, which gives us a red zone target. And look how accurate that is. It literally went there to the pip and has bounced. So you can see that these are working really nicely. So if this market is going to go lower, you can do the same thing for these moves here. So you can go A, B, and see where the market's going to pull back to, and then look for the targets that way. So if this market, for example, went back to the yellow zone, which looks like a possibility, this market would be going back to the yellow target right there, which coincidentally matches our old 200, which is a really powerful sign that 1600 is possible. So if this market is going to start to pull back further, I'd be looking for about 1600. So looking for a potential sell around 1790. So old resistance becoming support. And you'd probably want to place your stop above this channel line, just in case it kind of spiked a bit higher and then went lower, but or just above this high. I think,
mate, we've got 4 minutes left, so why don't you just dive into this one and do
that's more than enough.
Do you want to just jump in? You've got the 4-hour chart up. Do you just want to finish that off, and then obviously we won't have time for the FX pair? But if you were going to do that, then we've got a little bit of time for you if you've done something already.
Yeah, I mean, right, like not really. I mean, you don't. To be honest, I mean, right now, if you were looking to buy this, the thing that I would say is you'd probably do something like it might be easier on an hour actually. Let me show you on an hourly chart. So let's say, for example, you looked at this and you're thinking, yeah, that looks good. I think we might just push up there. Maybe I'll find a buy trade up to here. So the way that you would do it is you let the day finish, or doesn't necessarily have to finish. Ideally, you want to kind of be looking for a retest of the one of these two lines here. So a retest would be somewhere like roughly 1719 or 1692, right? So 1719, 1692. So go to the 1 hour chart, stick those levels in. For those that want to buy this, 1719 would be there, and 1692 would be there. And I would just take the high point and just see where the 618 comes in. 618 is there. That's in our green zone. So anywhere between. So if you want to buy this up to 1790, that I think that's the. And I would even just come out a little bit before, as we were saying before, somewhere there. I would be looking for only to buy this in this zone. So only here. So anywhere else, it's not high probability. So you want to buy this in this zone, have your stop below this low, and then target that. And then I would then be looking for the reverse trade around 1790 to short this, potentially down to 1600. That's so. In other words, buy here, sell to here. That's in essence what I would be looking for if I was trading this. Okay, guys. Let me stop screen.
Mate, I could sit with you all day just going through all of this stuff. Imagine just being able to sit with Darth Demi going through currency pairs and gold and looking for this, mate. We're gonna have to work something out with that. That's pretty awesome. And that's not just me saying that. Jason saying genius. Ha! Nick, what a great mindset to have now. Now there are too many trades to choose from. That's where risk management comes in, my friend. And Brucey as well saying brilliant. Thank you very much, mate. So look, whilst we've got a couple of minutes left, there was a question that I saw earlier. I just want to scroll through. Here we go. It's from Zach. Going back to your question about scalping, he's just started doing scalping. How intense can scalping be if pursuing long term? I've started today and it's a bit to get used to, but I use my soldier training to keep my sanity. So I know how much you like ex-military folk and how you've helped them become pro traders in the past. So you've got that kind of kindred spirit with military folk. But for those of you that are new to the group, do you just want to tell them how long you used to trade in like day trade when you were doing the hedge funds and the trading floors? Like how many hours a day would you do?
Well, I was doing a lot. I mean, I was doing about 15 hours a day trading. Yeah, I mean, that was all I did pretty much for my day. So it's pretty intense. But the more you do, the more you watch price. It's not, you don't have to be in and out of the markets all the time, but it's about observing. The more you learn, and the more you learn about price action. So I mean, I must say that it massively improved my price action trading. So I can maybe even my intuition for markets, just because like it almost, they say 10,000 hours, but obviously you get to 10,000 hours of mastery a lot quicker if you're doing 15 hours a day. If you can hack that, most people can't.
Or would want to. That's Darth Demi status.